Okay, well, welcome, ladies and gentlemen, to the Swiss Mining Institute. So the topic is very simple. What a difference a year makes. Last year we had quantitative tightening, higher rates, a strong dollar, and the gold stocks went down 30%. And here we were standing together. It was a bit depressing. It was a pretty big hit because when an index is down 30%, it means some of your stocks in your portfolio can be down 50% or more. And I had a little video with a song, well, I'm so tired of waiting for gold to shine. And you know markets, it's when we're tired that things turn. This year we have quantitative easing, lower rates, and gold broke out of this huge basing formation. The longer the base, the more dramatic the rise. This, I think, is historical. We're going much, much higher. Those who were brave enough to buy the dips or to take a position like last year in these gold mines are up more than 40%. So what's next? Markets are never easy. Every time we've had good markets in gold, we had another devastating correction. So I'm going to try and go through a few elements to try and answer this question. Is there a new market leadership in the world? Are the fundamentals still bullish on gold? What about sentiment? Is it time to buy the dips, or is this correction going to go much further? New market leadership. There's a rule in technical analysis. Don't think, look. First of all, Ray Dalio, one of the best and biggest hedge fund in the world, has talked about a paradigm shift. He said in May 2018, if you don't own gold, you know neither history nor economy. That's a good start. So let's look at what's happening. Real estate is weakening in most countries. Even in Switzerland, we've had house prices go down in the recent years. There's nothing to gain in bonds. You know all the negative rates hanging around. The 10-year U.S. bond is at around 2% yield, and the Greek bond's about the same. Does that mean that the Greeks are now just as good as the U.S., or does that mean that the U.S. is just as good as Greece? Since last year, stock markets, much ado for not much. The S&P was up 5.2%, but the broader index, the Russell 2000, is down 7.4%. Netflix is down 19%. The marijuana stocks collapsed. Russell flat, marijuana down, gold up. So where do you want to be? In the markets that are doing nothing, or in the markets that are more dynamic? Gold is up to all-time highs in some currencies like the Canadian dollar or the Australian dollar.
Might be your cell phone, Claude. Thank you.
Gold in other currencies like the Swiss franc are near their all-time highs. And those who were brave enough to buy in November 2018 have been nicely rewarded. So what's next? Are the fundamentals still bullish? I think the fundamentals have never been as bullish for gold. The Fed has been tightening for a year and a half, reducing the liquidity by $50 billion a month. These are huge amounts, and that's probably why the stock markets fell in the fourth quarter last year. But since September 9th, everything has changed. The Fed is back to money printing. In the week ending September 19th, they printed 23 billion. The week after, 58 billion, 83 billion, 17 billion, 03 billion, 23 billion, 32 billion. This is a very, very important change. This will help us. This will get the gold price continuing to rise. World monetary aggregates, M2, have risen 180 times faster than world gold production since the 1900s. If you want to cover the US monetary base, you need $12,600. So gold is not as expensive as many think. Debt is piling up everywhere. No ceiling to debt? What does that mean? That means no ceiling to gold. US debt, 106% GDP. China increased its debt by 26% in 1 year. This means that high real interest rates are today impossible. And as you know, if you have low real interest rates, that's a very big positive for gold. So basically the world is going the way, in terms of currencies, the way the assignats did during the French Revolution. Rather more down than up. Recessions are unavoidable. Today, no economist predicts a recession within the next 3 years. They don't have a very good track record of predicting recessions. Politics are deteriorating everywhere. You have Trump impeachment, you have trade war, social unrest, populism on the rise. What does that mean? This will lead to less fiscal discipline. The US budget deficit is now nearing $1 trillion. On a very positive note, central banks are still huge gold buyers. Last year they bought 657 tons, and this year the World Gold Council estimates they will be buying 700 tons. This is huge because the gold market is 4,345 tons per year. So central banks have been seller for all these years, and they're now in a buying mode. Gold holdings are also going up. They're at all-time highs in the ETFs. Conclusion. Money printing creates excess liquidity in the financial system. That means that the stock markets can continue to go up, but it's very, very positive for gold. Gold is anti-fragile, as Taleb would say. Gold stocks are cheap, and it's a good diversifier. When we had a big correction in the stock market last year, stock markets were down some 20%, but gold was up 8.1%, and gold stocks up 13.7%. So people who say that if the stock market goes down, gold stocks necessarily go down because they're stock, this is not always the case. Another great chart here to show that when you have big accident in the stock market, gold is a good hedge. This is a chart of incrementum. They always have fantastic research. It's free, it's quality. I encourage you to look at their website regularly. So sentiment. It feels like the real bull market, the wall of worry. Gold is up a lot, but we're not feeling that good. Commodities versus the stock market are all-time low, but gold stocks are cheap, price to cash flow around 10 times, but very often these stocks can trade at 15 times, 20 times. Enterprise value per ounce of resource in the ground, very, very cheap. Most important for the companies which are here is that these smaller gold companies are trading at big discount to larger companies. So that is where you have the best opportunities for outsized gains. Since 2000, there has been 1,492 mergers and acquisitions. That will continue. A very important element is after having seen costs rise dramatically till 2012, the industry has improved tremendously and costs have stabilized. What does that mean? That means if you buy a gold stock, a producer, and gold goes up, you will have a huge leverage, as you should. And usually, as you know, gold stocks go up 3 times more than gold. And now you have the earnings coming in. With $1,500 gold, gold producers are reporting great earnings. People will have to notice, and not only computers. Smart money is buying, and they're more vocal. Eric Sprott, Ross Beatty, Ray Dalio, Pierre Lassonde in Denver in the summer predicted gold could hit $30,000. But we don't need that, don't worry. So with all these charts going up on gold and gold mines, why is there such a lack of interest? Well, you know behavioral analysis. We are always impressed in market by the most recent experience. And what is our most recent experience? Is that in 2016, after a nice bull run, we had a 41% correction. Last year, 30%. So now we're in a correction. So we're all influenced by what happened here, and we're expecting the worst. On top of that, you will have talked in some small caps tax loss selling. So the question I, as a private investor, is asking myself, and I suppose you're doing the same, is has this current correction run its course? Well, I've looked at the history of the corrections during the 2009-2000 bull market. We've had 5 corrections. On average, they lasted 6 to 8 weeks. We're now above 2 months. On average, gold was down 10% and gold stocks 20%. As we speak today, we're down about 15%. So as you can see, we're sort of nearing the average correction in a normal bull phase. Silver has corrected a Fibonacci 50%, so I believe and I hope that this bottom will hold, that we've seen the low. Same thing for silver stocks. If you look at the chart of gold, it's a mellow correction. It's a sign of strength. The gold stocks, same thing. We're correcting, so this is a buying opportunity. We are in a bull market, so even if we don't hit the bottom of the correction by buying at the low, which we usually don't achieve, it doesn't really matter because we'll be bailed out of our mistakes. So, buy the dips. What do you buy? Well, the foundation, of course, is physical gold and some physical silver. And as you know, silver always goes up more than gold. Gold funds, you have great funds here in Switzerland. Erich Meyer did a fantastic presentation. He showed in his presentation that his fund was loaded with stocks which were much cheaper than the average. So he will do, I believe, much better than the index. An interesting situation is the Golden Prospect Precious Metal Fund. It's run out of London by CQS. They have a good track record. They're solid analysts. They buy low cash flow single assets. And they're trading at a 28% discount to NAV. Producing company, as we saw, since they are not increasing their cost of production, the leverage will be enormous. And last but not least, of course, more speculative, but that's where the real value is the people who have huge resources in the ground and the small caps who are trading at significantly lower valuation than the big caps. Last year I recommended Equinox Gold because the chairman is Ross Beatty. He's a serial winner. The stock has doubled. It still will go much higher. Same idea. Let Rob McEwen run your portfolio with McEwen Mining. The stock is starting to move, but as you can see, there is a long way up to go. These stocks are the ultimate call options on gold. Today, nobody is interested in them. It might be a bit early to buy them, but they have huge resources. Here you have the number of ounces in million. Seabridge has 63 million ounces of gold. The price of the valuation in the market of these ounces are very, very low. It's difficult to compare one to the other, so you should buy a basket of those you particularly like. Vista Gold will certainly be a mine, Western Copper and Gold also. But in a bull market, people will want the leverage and will go to these stocks. You know, I've always liked these silver stocks. Here you have Mag Silver presenting, great company. They still have huge exploration upside. Fresnillo, the best producer in the silver space, will bring him into production. Exelon, huge leverage to silver. Fortuna Silver. Pan American Silver, this is a big cap. And there are plenty of reasons for which this stock could go much higher. Today, the quality of the companies here are outstanding. And if you buy the companies you like here, I think you will do really well. Why is that? Because small caps are still very, very undervalued. Today, you're at the beginning of the bull market, so only the better gold companies can travel abroad. Why? Because they have cash and they have a dynamic management. And most importantly, we're at the early phases of the bull market for small caps. Some stocks that are here that I own: Orion, market cap $130 million. They have a major discovery in Finland. And most importantly, Dave Loughton, who is here, is the chairman. The stock is owned by Eric Sprott. It's owned by Ross Beatty. If these guys own this stock, we can too. Sun Metal, major discovery. It's 60% copper, 40% gold, so you have to be bullish copper. They have great exploration in British Columbia, in Canada, safe jurisdiction. The stock has been correcting quite a lot. It might be a good entry point. Fiore, market cap $40 million. They have huge production growth coming, huge exploration company, great management. I doubt if this stock doesn't go up some 10 times. So here we are together. 2019 is still a stock picker's paradise. So enjoy your conference, do your due diligence, and buy the dips. Good luck on your investing. Thank you very much.